From Sandeep, morning. Thank you for joining us. Sandeep, what is the mood at the Kotak Institutional Conference and what are the sound bites you're picking up from the Fidelities, from the Goldman Sachs and from the Halbis of the world? Are some of your top clients now in a panic mode because no one has participated in this rally?
Investors, I think, are congratulating us for a very good timing. We had probably the first conference coming off after a very good run in the market. As you know, the Indian markets have been one of the best performing markets in the first month of Jan. I think it's partly good timing, partly good luck. I think the real issue, as I see it, is investors who have been taken a bit by surprise. I don't think anyone anticipated the kind of rally that we have seen. And that's been combined with, of course, the strength in the currency. So it's almost a 20% plus dollar returns that we've seen in the market. I think right now, most people would assume that the rate sensitives would continue to perform. The election, which is results, and the budget, which is around the corner on the middle of March, will be the inflection points in determining what's the fundamental trend for the market for the rest of this year. Right now, I think we will have a positive bias in the market.
Sandeep, hi, morning. Indian markets have posted gains of 14% year to date. Is there still a value in the market and are investors still in the green zone?
I think the Indian markets, as you said, 14% index returns, and there's on top of that, there's currency returns for. So in dollar terms, the returns are higher than 20%. But I think right now the market's still in the green zone. You still have pockets of undervaluation, and those pockets, especially in mid-cap stocks, can deliver returns. On the flip side, the earnings season, which has gone by, has not produced any major disappointment. The only big disappointment I can remember is probably the weak results and the guidance which came from Infosys, and also some of the disappointment with the Reliance Industries results. Other than that, especially in some of the pockets of weakness which we anticipated, like the bank sector, whatever results have come till now have not shown any significant cause for worry. And on operating terms, bottom line operating earnings and top line have held as per expectations. So I would think that market's still in green zone.
Sandeep, what do you make of the ruling or the Supreme Court ruling in the 2G case, and to your mind, what impact it will have on FDI and the entire telecom space?
No, it's difficult to give an intelligent comment without reading through the entire judgment and what its implications are. On the face of it, what I can quickly say is clearly it's a setback for all these businesses which came through from 2008. I'll have to wait and see if there is what are the exact contours. Clearly, there's risk which in terms of non-performing assets which could bound on balance sheets of banks, and also whether this will be subject to further litigation. So, given that one cannot assume that everything is just sorted out. Of course, the decision has come from the Supreme Court, but there could always be again an appeal. We'll have to wait and see whether that's possible. But it's good for the incumbents. That's the most sensible thing to say, and most obvious thing too. But I would not rush to judgment. I would be worried about the banking sector and the implications on that. And of course, it also means that the Supreme Court has given a very strong signal to the political and the corporate class that rules need to be followed, and there are going to be huge implications when rules are broken. Longer term, that's a good thing, but really in the near term, it continues and contributes to some of the uncertainties that we all are aware of.
So Sandeep, is Bharti a clear buy after the SC verdict?
Yeah, if you assume that in the next 4 months all these businesses are going to go out of business, or all the licenses issued after 2008 will be non-operational, then clearly that's a big domestic positive that has happened for Bharti, and that's what probably the market has reacted with the kind of 7% kind of uptick we have seen in the price. So if that's correct, you are right. We'll have to wait and see whether this exactly holds or anything changes from now to the next 4 months.
So, Sandeep, to your mind, after the recent run-up, where are bargains in this market?
I think bargains are probably in businesses where there's going to be significant earnings surprise if the economy holds up. So I think to that extent, Maruti looks good. We went through the worst quarter in terms of earnings for Maruti last quarter. Company is on record to say that they expect margin expansion of between 200 to 400 basis points on a quarter-on-quarter or a YOY basis. Currency will still be a risk for Maruti, but on the whole, I think operating parameters will show significant improvement from the last quarter, sequentially, and for the next 4 quarters. Other than that, I think we can continue to bet on some kind of recovery in consumer sentiment on the back of what's happening to interest rates. To that extent, I would think that even Z looks interesting. The business has gone through a soft patch in terms of advertising revenues. We've seen some investments coming through in new programming, and that's something which can raise advertising revenues. So that would be good. That would be good. And so these are some of the places where one can see good valuation. If you look at the IT sector, we have seen Infosys disappoint. There's also a bit of feeling that whether the management can deliver. We would think at these valuations, Infosys, TCS both look very interesting.
Sandeep, according to you, so what could be the range for Nifty over this quarter as well as 2012?
It will be difficult to say for the rest of the year because there are still uncertainties in terms of Europe and uncertainties in terms of the Indian fiscal contraction, consolidation and contraction path. So to that extent, I would not go into the full year thesis. From now on, I think it's a range-bound market with probably a 10% upside at best in the near term, and one should be selling if one gets any kind of uptick over 7% in this market. This is a trading market, and one should trade it and book profits when you get an uptick.
So, Sandeep, what is the best way to make money in such a market at a time when global liquidity is sloshing around? Is it time to clearly align with large cap stocks, or it is time to revisit beaten down mid and small cap stocks?
We have had a big, the best way to make money in this market is to take a liquid stock. Even if you take Reliance Industries, we have had a buy on this since last year. Of course, this was far ahead of any announcements coming in terms of buybacks by the management. But take a large liquid stock and trade it in a 10% band. That's the best way to make money in this market. To make big money, we'll have to take bets on mid-cap sectors, mid-cap stocks, but for that we probably need more policy actions to come through. Avoid still some of those balance sheet issues which we have seen. So I would still think that one should be careful about the likes of engineering, construction and real estate. These stocks have also done well in the first month. So even despite that, I would think that be mindful of the risks you are taking. Confine yourself to the large liquid names and trade them in the 10% band.
Okay, Sandeep, good to have you on the show. Appreciate you taking the time out and joining us today.